Datin Sri Rosmah Arul is said to be grilled by police over the 1 billion ringgit worth of jewellery, tiaras and other luxury items seized in premises related to her and ousted PM Datuk Sri Najib Razak. Deputy Inspector General of Police Tan Sri Nur Rashid Ibrahim says Rosmah will be summoned very soon to identify the items and the manufacturers. As for Najib, Nur Rashid says the Pekan MP could face additional charges as his agency is not done investigating the 1MDB scandal. Another individual who could be in hot water over the fiasco is former 1MDB CEO Arul Kanda, whom reports say was grilled by police yesterday. Meanwhile, Tun Dr. Mahathir Mohamad says Malaysia is resorting to private efforts to bring low-tech Joe back from China. Quoting the PM, Bernama says this is because Putrajaya doesn't have an extradition treaty with Beijing, and it would be quite tricky to accuse the Republic of hiding the fugitive businessman. As to why he thinks the Republic has not sent Joe Low packing, Mahathir says he could be a bargaining chip of sorts for China. Last month, Joe Low and his father Tan Sri Larry Low were charged in absentia in Malaysia over money allegedly siphoned from 1MDB. Finance Minister Lim Guan Eng has reportedly warned that he has no goodies to give out in Budget 2019. In an interview with Malaysia Kini, Lim said the upcoming budget, which will be tabled on November 2nd, is going to be a very difficult budget. He says it is likely that he will end up as the most unpopular finance minister. Lim told the portal Malaysians are not used to not getting goodies, but the government needs Malaysians to make sacrifices to help cut the 1 trillion ringgit national debt so that Malaysia can get back on track within 3 years. In response, his predecessor, Datuk Sri Najib Razak, says he was not surprised with Lim's statement, saying that he expects the budget to scale back on financial aid or impose new taxes to help settle a fabricated national debt. He says the BN government had never told the rakyat to make sacrifices and says it is PH's own policies and steps which have derailed the economy. Permodalan Nasional Berhad will be switching its focus to consolidating what has been done and ensuring previous deals involving investee companies achieve their desired objectives. This is in line with its new direction under the stewardship of newly appointed chairman Tan Sri Dr. Zeti Akhtar Aziz. Zeti says there will be a period of consolidation at Putrajaya's investment arm, with PNB letting the market drive corporate merger or demerger exercises. PNB is now focusing on core companies under its purview, whose stock performance has lagged behind the KLCI year to date. Group CEO Dato' Abdul Rahman Ahmad says this category involves firms in which PNB has shareholding of over 10% or exposure of above 1 billion ringgit. Pointing to companies in the telco and construction sectors, he says PNB understands the external challenges and now aims to engage with them. With Zeti at its helm, PNB is set to undergo an organizational transformation, including the review of its 5-year Strive 15 program ending 2022. Among others, Strive 15 includes a target of 350 billion ringgit in assets under management at the end of the program. Year to date, it has increased its AUM to 288.1 billion ringgit. Zeti says PNB will also look at new opportunities and gradually diversify its investments overseas across different asset classes. Axiata Group says it will continue to evaluate all options available for its stake in Singapore-listed M1, following a buyout offer by M1's second and third biggest shareholders earlier today, and stressed that it would prioritise shareholders' value in its evaluation. Keppel Corp and Singapore Press, via JV company Connectivity, are offering to pay $2.06 apiece for all shares they do not already own. The preconditional voluntary general offer is a premium of 26% to M1's last trading price of $1.63 before the stock was suspended from trading. Axiata holds a 28.3% stake or 265.4 million shares in M1, which means that its block would be worth $546.7 million or 1.66 billion ringgit based on the offer price. Axiata says it will review the offer together with other considerations. These include comparable premium on precedent transactions within the ASEAN market and the future competitive outlook for M1. Keppel and Singapore Press control about 33% of the target company. Hong Leong Group is said to be focusing on the vitamin and supplement space after it reportedly acquired honey business Manuka Health from Australian private equity firm Pacific Equity Partners. The Australian Financial Review says it is unclear as to how much the group paid for the business, but the price is thought to be in the hundreds of millions of dollars, with PEP making just south of 3 times money on its investment. Meanwhile, the New Zealand Herald says the new investment capital would support the Manuka Health business as it builds on its extensive supply platform. Manuka Health, New Zealand's second biggest Manuka honey company, counts Germany, Japan, Australia, China and North America among its markets. The transaction is subject to New Zealand's Overseas Investment Office approval. Until the process is complete, its new owner has reportedly requested anonymity.